Hello there, this is FairBinaryOptions.com, and I would like to talk today about the US dollar and Canadian dollar 4-hour chart and how to trade binary options with inverse head and shoulders. As it seems, we are having here a nice inverse head and shoulder. A head and shoulder and an inverse head and shoulder is being formed out of three parts, and of course, like the name suggests, one of it is the head, and this seems to be the head. The head is the spike lower or to the upside if you are talking about the head and shoulder, but this is an inverse head and shoulder, and this is the head. We are talking about two different shoulders, the left shoulder there and the right shoulder here, like this. And normally any inverse head and shoulder is being treated in relation with the neckline. The neckline is the line that goes above the left and the right shoulder, and this is a difficult line to cross. Let me make it a bit bigger. A difficult line to cross, and usually after the neckline it is being broken, usually it is being followed by a retest. It is not mandatory for price to come to retest the neckline, but by the time the neckline it is being retested, let's say that the pattern is stronger, it is being validated, and bullish outcome in this case is about to start. So in our case, when trading binary options, we are looking for the neckline to be broken. Well, the neckline has just been broken here. This is a 4-hour chart, so the breaking was coming, let's say, on the 1st of October, so 3 days ago. In the meantime, we just retested the neckline with a bearish, let's say, outcome here for the pair, and it is only logical now to go and engage into buying calls. So this should be our outcome here, buying calls with different expiration date. Now the expiration date for this should be end of day or 1 week expiration date, because this is a 4-hour chart. So only this time here was meaning three days. So you have to imagine how this outcome should look for the measured move. Any inverse head and shoulder or head and shoulder comes with a measure move, so this being the measure move for the head and shoulder. Let me change the color for it. This measure move should be placed on top of the neckline after price is breaking the neckline. So price broke the neckline here, and there you go. We have a target to the upside for this measure move. Let me try to take a horizontal line, and the target to the upside is 104.70 for the upside of this inverse head and shoulder. Now it remains to be seen what price is going to do, but in terms of trading binary options, whenever you are looking at a possible bullish outcome, then you are engaging in buying calls. So let's just write here that we want to buy calls. So buying calls for end of day expiration or 1 week expiration date. What I would do here, I would try for end of day expiration. This is Friday. In terms of fundamentals, we do have some important event to come for the US dollar, Canadian dollar. That event, it is being called the IV PMI in Canada. The IV PMI is the equivalent of ISM is the equivalent of ISM in the United States, or the PMIs in Europe and UK, in the Eurozone and UK. So basically it is being interpreted in relation with the 50 level. If the value is higher than the 50 level, then the sector is being called an expanding sector, and if the value is lower than the 50 level, then you are having a contraction for the respective sector, and this is usually creating volatility for the pair. So looking for a bit of volatile environment. No jobs data out of the United States in terms of the NFP and unemployment rate, they have been postponed or cancelled from the release today because of the government shutdown we have in the United States. And there you go. I would say that the positioning here would be on the soft side on the Canadian dollar, because the US dollar Canadian dollar is reacting to the upside on any risk off environment. This seems to be a risk off environment based on the problems in the United States, and this is why we are looking to the upside. Whenever you are buying calls, you are looking for price at expiration date to be bigger than the striking price. So if your striking price now it is 103.28, as you can see here, you are looking for the expiration date. So we choose the expiration date as being today at the end of day or 1 week expiration date. So you look for this to be higher than your striking price, and there you go. Your option would be profitable and will expire in the money. It remains to be seen. This is FairBinaryOptions.com, and this is all possible due to our official sponsor here, Lion Eye.